Welcome to TradeTheMBI.com. This is John. This report is for the 12th of March. Well, we got a little bit of that continuation. We came right to that ABM yellow within we were seeing from the DOC with the cyan moving above, and given the weakness of the short setup within the MBI, white not really making any significant move. We knew that the ABM would likely hold. The question was the Nasdaq and whether or not it would be a further drag, but the S&P seems to have held things in line. Still soft from an MBI magenta reading here, but that's marginal given the fact that you just don't have any short activity at this particular point. Shakeout's still positive, so all in all, things are just holding along, and it's relative to anything new developing, and nothing seems to be taking place on the world stage that's causing any great disrupt. We could see that support of the S&P was enough to keep the Nasdaq from breaking too far below the 76%. Held up there and came back after dipping below, and you can see shorts faded off of it pretty quick once they got just a little bit of uh, breathing room in there, and they're like, take profits quickly because this has been extremely strong, and there's just no change because what are you going to do? You're going to move into treasuries, not at this particular stage, given what rates are and the disparity between what inflation is doing. Of course, everybody's going to be looking at the latest CPI print that to get a gauge on where their things are continuing to heat up. But with oil where it is, it's still going to be increasing, just not at a super clip. But that doesn't change the fact that everything's getting more expensive day by day because the dollar continues to be drained when you're adding $1 trillion every 100 days to your debt. There's no relief in sight from that, and I think that's been the big fuel. Of course, the eurozone thinking that they're going to get some benefit from softening dollar, but relatively speaking, no. The fact that they're where they are now is kind of a bonus for them, but we see this pattern all along where there's just too many pushing one direction. But if oil continues to rise, you've got to transfer those into dollars for them, and they have to trade out of euros. And this is why you've seen the spike in gold is not going to stop. You may have these pauses and that, but it's going to continue just like you're going to see with cryptos because again, this becomes a bit easier. You're not actually having to hold a physical thing and still presents the same alternative to being in fiat currencies, which continue to devalue. ETH outperforming. They're doing some new additional platform adjustments, and some of the development programs certainly are going to make transactions faster in that. And when they get them to the point where they're cheap, inexpensive in that, it's just going to create more activity towards them. We can see from the 50K, we came back, filled in the bottom of that. That created some support, and we're getting a bounce right there. We had the MBI white leading here just briefly. Wasn't enough to turn it down because you still had magenta over yellow and still rising above that 25 and then got above 33, and that's where it is now. So that's enough to hold on to things at this particular stage. We're going to probably hit some resistance at the 50K. We'll be able to see it at the DOC when it finally meets that point. From an intraday standpoint, you can see the pre-market was very soft from the European session, and then it built up strength slowly. There just wasn't enough sell pressure to do anything, and even here in the post-market, nothing's changing from a European session. They're filling back a little bit to where the original post-market close was, and from the dip and building on that. And so we should have another back and forth day, but still pushing towards higher and higher moves simply because the market is not going to suffer any devaluation. It just doesn't work that way. And I know a lot of people object to that when they hear it because they think, oh, well, earnings, this, that, and the other. But you have to really pay attention to that devaluation construct and what it means for the market and where people apply their money to counter that devaluation. So that's a relevant topic, and it's something that will continue to be at the forefront as long as they don't have a handle on where things are going price-wise, and no change in that aspect. As long as you're going to continue to spend at this rate, no relief in sight. And of course, with the election year, there's not going to be a whole lot of anything happening. So that just means more of the same. So the market's taking advantage of it. As always, anything relevant, I will put it on the Skype chat. Have a good one. Trade well.